Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and a very happy Thanksgiving to the main man of the hour, AJ Brown. Good morning, AJ. How are you feeling?
I'm feeling full.
I am also feeling full. I love the day after Thanksgiving because I feel like I always sleep good. But in terms of the world, the day after Thanksgiving is Black Friday. Everything that I'm seeing now on the news is the CEOs of the retail stores and how's Black Friday starting off. So, first off, let's go ahead and wish everybody a happy Thanksgiving. We hope everybody had a good time. AJ, it is a holiday week. We did talk about the slowness last week. What are you seeing? Are we extending our rally from last week? What have we learned from last Friday's show that may be a little bit different this week?
I mean, the rally is being exhausted. Today we're only open till 1:00 in the afternoon. So today's going to be kind of just a quiet. We never see on the Friday that follows Thanksgiving much activity. But yeah, the current rally, I'm showing the S&P 500 right here. The current rally is definitely exhausted. We see a lot of the overbought indicators just pegged to the overbought side of things. We know about that resistance level that we're creeping up on. We're about 45 points away from that resistance level. And we know from quantitative analysis that there is so many sell orders ready to pop here. And so it becomes a self-fulfilling prophecy, SIP, when there's a lot of selling that makes price go back down. Right. So we expect that as we get closer to this 4,600, that we're going to start seeing some downward pressure. I mean, the only way to fight that overhead resistance would be to have just a heck ton of buying. If you can match the amount of automatic selling that's going to kick in at 4,600 with the same amount or more of buying, well, then you'd be able to break through that resistance. Right now, with this current rally move being as exhausted as it is, I don't see that happening. The big question is, if we pull back and kind of regroup, that would be called a range contraction phase. Could we then rally enough investors to get enough buying to get above that level? That's the big question on people's heads, at least from a technical perspective.
And in terms of any news that could push that through this week, it seems as if things were limited, right? We did have some Fed chatter, and oil and bonds are still kind of on people's purview. Anything that stuck out to you this week?
Yeah, we had our Fed meeting minutes. So what the Fed meeting minutes are is 2 weeks after a Fed meeting, we have the Fed meeting minutes, kind of the inside notes of what they were talking about released. And so in one aspect, the Fed meeting minutes reiterated that the Fed is ready to continue raising rates. And at the same set of notes, they said that there is some hints that a recession, meaning not a soft landing, that we could actually go too far in our corrections and cause the market to stall. When you take a look at, for instance, that investor sentiment that you and I like to look at around whether or not people think that there's going to be or investors think there's going to be a rate hike, it almost seems like, well, according to the meeting minutes, that the Fed has no idea what's coming next, that it could be more inflation or we could have overcorrected, which is two sides of they equaled out in those notes. So people actually believe that the Fed are in a wait and see period, and that at least for December and maybe even for the Fed meeting at the end of January, that the Fed's probably going to do nothing as far as interest rate hikes or drops. And a lot of investors in March actually think the Fed are going to start pulling back interest rates. That's what you can see here. There's a growing number of sentiment that the Fed may actually pull back rates in March, and that would mean that we've hit our targets and we're going to start pulling back and keeping the economy going. So all to say that little piece of knowledge was a lot of uncertainty. And so the market is kind of pegging itself now to bonds and oil prices. So when oil prices go down, the markets go up. When bond yields go down, the markets go up. When bond yields go up and oil goes up, the market goes down. So it's going to be kind of this little thing going on. The only other piece of data will be, like we talked about, looking at those retails for the holiday season for the next 4 weeks. I think a lot of eyes are going to be on that.
I did see an interesting stat come up on Twitter that I'll pull up onto the screen. The S&P 500 tracks one of the best November gains on record, and this is going back to like 1928, up at about 8% for the month. In addition to that, another stat that I saw that was interesting was the VIX falling to its second lowest level in 4 years. What are, how are you taking that information and how are you using it to try and invest, right? It seems as if we were set for this quote unquote recession, a slowdown, but November is out of the water. And is it a good time to use some of the option strategies, the premium selling? Like, is this a good setup to implement those things that you've been teaching the students in the community for over 2 decades now?
Absolutely. The scoop is there's a lot of folks who are saying that, yeah, this is an amazing uptrend, but I'm not pessimistic, I promise. In fact, a lot of people always tell me that I'm too optimistic or bullish, but I have to be completely honest, Sip, from a technical perspective, and I always like to just read the facts. This is what we call an immature uptrend, meaning in order to have something that is mature, that a lot of the investors can jump in on and back, we need to have a couple of tests of resistance, but also a couple of tests of support. And until you get this little rally that started back here on October, October 24th, I think. Let me just tell you exactly. October 27th. It was on that Monday. This little rally that started on October 27th, it's been going for about a month, could be a one-off rally until we see that maturity established. This could be just a one-off piece, right? When it pulls back, and that's going to be the key. Let me show everybody something that I'm looking at that maybe you can look at too. Now, I'm going to base this on our highest high, which was yesterday's close. We could get a couple of higher highs, but it almost looks like our current rally is near its end. But if we start to pull back from this highest high and we get to this pink or magenta area that I have outlined here, somewhere between about 4,285 to about 4,390. If we pull back there and then start heading up towards that 4,600, I would have a little bit more confidence in calling this an uptrend and trading it like an uptrend, right? And then especially if we did break through that 4,600, then I'd be all in, right? But as of right now, and especially if we, for instance, overshoot that range, if we overshoot that range and start going below 4,285 or whatever this zone is once we've established our high. Again, I'm calculating this zone based on the high from yesterday. But if we go a couple points higher, this will be slightly different. But if we overshoot it, if we go lower than 4,285, I'm back to saying that was just a one-off kind of investor optimism and that 2024 is still negative. All to say, Yeah, this is not a mature trend. I'm not buying into, that all of a sudden we're going up from here. And when you have this confusion and uncertainty, especially in these times of transition, options are, if not the best, the only way to invest for profit. Any other directional strategy you're using on just the underlying symbols, I mean, you better be pretty gosh darn nimble because things could change on a dime overnight.
Yeah, and we'll touch on the options part real quick. But one thing that I like to think about when looking at this chart is the end of year, right? So
Mhm.
with the end of year coming, um, within like 4 weeks, right? 4.5 weeks, maybe 5 weeks.
It's coming
Looking at
fast.
looking at the chart, it's like, do we really have the bandwidth to push through that like we would really need to see some major changes to get all the way through that 4600. Otherwise, you might be on to something in terms of portfolios positions being closed out end of year to see that pullback a little bit to the pink area like
Mhm.
you identified, and then maybe having the legs to slingshot back through that 46, right? And that's
Yeah.
more of like, it's more of like a when you think about all the money that's involved in the market and how some of those positions need to be closed out, keeping that in mind.
That was something that Ryan actually brought up. He was our guest from last week. So, folks need to understand that the big money managers, especially folks who are managing mutual funds, but also big pension funds, that's like the majority of money in the markets. And those guys need to reshuffle their portfolios during the month of December because the snapshots that are taken, you guys might know if you've ever been in the market for looking at your various funds for pensions or 401k funds, or if you're a mutual fund shopper, you get that picture, that prospectus snapshot that tells kind of the what the mutual fund is made of. Well, that snapshot is taken in December. And realize that these managers are constantly moving their fund around, but they want that picture in December to look really nice because that's the kind of brochure that's going to be given to investors for the rest of the year. It also gives them a chance to kind of recalibrate the holdings of their fund for the new year. But yeah, Januaries are notorious for prognosticating what the rest of the year is going to be like. So I fully believe that, we're going to get exhausted towards the end of November, beginning of December, as we approach 4,600. We might be exhausted now with this current move up. And that December will probably see a pullback. And I'm going to be, like I mentioned when I showed you the chart, I'm going to be watching to see how far it pulls back because that's going to be critical. And then January, I can see us determining what 2024 is going to be like. So let's all be in tune there. Let's see, when do we get this current range expansion, this current upward rally move? When does it end? Number two, how far back do we pull back? And number three, what's next January look like?
I'll tell you what I'm looking for, AJ. I am not as smart as you, and I'm probably not as smart as
That's not
many of your
true.
students. But what I am looking for is for that red arrow to pop up on your screen with
Hmm.
your custom indicator, because as we've discussed many shows now, it has a lot of the things that you need to see that pullback. So I wouldn't be doing anything until I see that red dot or the
Hmm.
red arrow on the screen. And with that, if anybody else wants to have AJ's proprietary free indicator, we just threw the link in the chat. Head on over into I think the freebie section
Hmm.
of Trading Trainer. You can download it. There's probably some instructions on how to get it in there, or some
Hmm.
tips.
Hmm.
But that's what I look at. And as we go through all these examples, it's on the screen, and it does a good job of telling or helping guide you in the direction. All right. So that's one. That's the indicator. Two is AJ's workshop. So later on in the show, we're going to go through some examples. AJ is going to get you set up with what you need to look for, some names that are on the watch list. But if you're new to options and you haven't gone down this road before, AJ's got a wonderful free daily workshop. We've gone ahead and thrown the link into the chat. Head on over there. You can watch it today. You can watch it this weekend. You can watch it next week. But it's really going to help set you up to follow along with some of our examples and the mix of using premium and options to take advantage of these market turns and not necessarily play the direction, but put yourself in a position to take advantage of whatever the market's given us. And this week it's given us a lot of green. So once again, we are live. We do have some bandwidth today. So if any of the viewers have some tickers that you want us to run through, feel free to throw it into the chat. Otherwise, we're going to take a short break. We'll be back. We'll go through the topic of the day. We'll do AJ's pick of the week. We'll do our speed round, and then we'll get back to shopping because it's the shopping capital or the shopping of the day of the year, right? So let's get our 50%. Hey, and AJ, I think we've got some Black Friday stuff, so maybe we can talk about that as well. All right.
Yeah.
Sit back, folks. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Once again, the link to that webinar is in the chat. Head on over there, sign up, check it out. All right, so let's get into our topic of the day. We were kind of discussing what we wanted to talk about. And since looking at the chart that we've been referencing, this S&P heading up 8%, one of the best months in years, decades. I guess the question or the topic of the day is, what does it take or what do you need to happen in order for you to fully buy into this uptrend? And I guess the simple answer is breaking through that 4,600, but that seems like a tall order.
Yeah, and not only that, so that's particular to this uptrend, but in general, I think that there's a couple of terms that our folks should embrace. And one of them would be maturity, right? So maturity in any medium to long-term trend or channel is a lot of times what us technicians call it. There's a channel. So whether that channel is going up or down or even sideways, in order for investors to start really buying into these levels of support and resistance, which capture that channel, and they could be sideways or horizontal support and resistance, they could be ascending, they could be descending. You need to have a minimum of 2 tests of each. The more tests, you notice the more thicker those levels of support and resistance are, meaning more and more people buy into them, right? And so then investors set their buy and sell orders. It becomes, like I said earlier, a self-fulfilling prophecy. If there's a bunch of buy orders at a level of support, it actually creates it where buy orders cause prices to go up. And if there's a bunch of sell orders at a level of resistance, it causes the price to go down. So it actually creates those support and resistance levels and makes them thicker and thicker. So each time you test it, more investors see that test and add to the strength of the support and resistance lines. So we need to have something that's mature for us to believe that it's going to have the legs to last a long time. So that's the first term, is channel maturity. And again, we need 2 tests. Like you can see here, we haven't even hit our top yet. And you pointed out that our free indicator that anybody can grab in our web portal, you just have to get the free access level. And then this indicator that you can add to your Thinkorswim is available there. Once that red arrow shows up, that'll tell us that we've got our second test, and we can connect those lines, but we only have one test down at the bottom. So this uptrend is not mature yet. The second thing is each of these individual moves within support and resistance, right? We want them to go a certain amount of distance in an uptrend. We want them to surpass the previous move by about 125%. So for instance, if the previous move down was $10, we'd want the next move to be $12.50. And every time we go in the direction of that uptrend, we want to go at least 125%. You'll notice if I show you my, I pull up my measuring tape. Let me go ahead and show you guys what I'm talking about. This is my measuring tape. So you can see this roughly 125% becomes this green zone. So you can see this current move is into the green zone. And that's what you'd want to see to buy into an uptrend. Every time you are going in that up direction, you have the green zone. And I mentioned these rules work for downtrends too. You can see over here when we were in the downtrend, you can see every time we were moving down, we got ourselves into that green zone. And that's when we started to really buy into that downtrend. So seeing these moves in the direction of the longer trend in the green zone, we call those ideal trending moves. And one last little criteria is an ideal move when we pull back would be into this magenta zone, about halfway. So again, if you go up $10, you'd want to see a pullback to around the $5 mark. And then if you pulled back $5, saying you go up about a 25%, you'd want to see then, a movement above whatever 5 times 25% is, something like $6.25 or something. But you'd want to see that constant move of pull back about halfway and then go up at least 125%. And those ideal moves and having a mature trend, that's when you buy into that trend direction. If it's a sideways trend, you'd want to see each one being about the same distance. So $5, $5, $5, $5, $5. Downtrend, again, just the downtrend moves more than 125%. Pullbacks about 50%. You can see in that previous downtrend, the pullbacks came into that 50% zone almost all the time. And that's when we were like, yeah, this is not only a mature trend, it's an ideal trend. So those are the little things that I look for when I'm ready to call this a uptrend that we can like buy into and start trading like trend following strategies and swing strategies. You got to see this trend really have some legs for continuing in the long term.
Yeah, and maybe we can touch on real quick on like the premium selling component in an uptrend, right? Because if you're an owner of certain stock names, maybe for the long run, right? You're certainly enjoying this run up, right? But as we've been talking about, there's some resistance at the top, and so what can we do as premium sellers, as options traders, to protect ourselves, right? That's as simple as, hey, let's sell something, collect the premium, and then when the market or a stock turns against us, we've kind of insured ourselves because we collected that premium. And then you can either get out of the stock, take some profit, right? That's kind of where the extension of the premium selling concept evolves. And so is that like the next layer of, if you want to get in on a trend, hey, you can protect yourself with options?
Yeah. So selling that premium gives us, number one, it takes advantage. So if you're in that stock for the long term, right, and it's going up, when it pulls back, well, you could either sell the stock and try to get back in when it's low, or you could just sell some premium, collect some income, and take advantage of every time your stock pulls back. Sell some premium, and then you could apply that money that you make on the premium towards a protective option, right? So instead of paying full price for the protective option, the option that'll make sure that this long position doesn't lose money if it all of a sudden turns tail on you, you could actually apply that premium money that you made towards the protective option and basically get protection for free. So yeah, you could totally take care of your, long-term positions, turn them into income producers while you're also making money on the back end. But the other thing is there's plenty of sectors and stocks always that kind of get stuck in a rut. No matter whether the overall broad market is sideways, trending up or trending down or in this moment of transition, you're always going to find something like 40 to even 70% of the stocks kind of just stalled going sideways. And a lot of people are like, well, what do I do in that case? Sell premium, buy protection. Those are even the best stocks to be able to turn into income generators. So I actually look for boring sideways stocks intentionally. The ones that other people cast away and throw to one side, those are the ones that actually make me money in the long term.
And on that, it sounds like one of our viewers may be following your advice. Rachel just mentioned she's taking profit on 2 of her positions that had really good gains over the past weeks, and which makes sense, right? Because it's probably one of the best months in a long time. Looking to add positions on a pullback, Coin and ROVR. AJ, do we want to maybe pull up Coin real quick and see? Just because that was
Definitely.
that's very much correlated to I think the overall crypto moves that are taking place right now
Yeah,
as
I
well.
think just from hearing that thought process, and just so folks are following along, if you have a position like I'm talking about that was a sideways stock that you were pulling income in, and all of a sudden that stock or ETF or index breaks out of its channel by more than about 40%. So we measure the channel. When we're talking about range bound strategies, like what we're talking about with premium selling, we always keep track of how wide that channel is. So let's go back and say, like, for instance, our channel is $10. If our symbol breaks out of the channel by more than about 40%, or in this case, or this example, $4, instead of looking for an opportunity to sell premium like we would have if it stayed in the channel, that's a perfect opportunity to take your money and run. And so Rachel says that's what she's been doing. Her positions broke out by a big enough amount, and that it makes sense for her now to take that money and all that income that she's generated, if she has generated from any of those premium selling positions, just take it and find a new home. So now she's looking for tops on Coin. And so Coin, as you can see, has a little bit of a rally. Waiting for it to peter out wouldn't be a bad idea. So basically, she wants to bet against Coin in the long term. So shorting some Coin doesn't look like a bad idea. But again, you want to wait for a nice solid signal. You may also want to research and try to understand what's this current little rally that's been happening since earnings on November 2nd. Be clear you understand what that is, because it looks like we are going up. You want to understand why investors all of a sudden like Coin for the last 3 weeks. Is it fleeting? Something like that. But then, you get the idea that this might be a fleeting moment of money brought into it, and you want to be on that distribution end. So you want to be ready to short it. And then you'll even be set up at that point for selling put premium into the future. So I like that. And then let's take a look at Rover, ROVR, Rover Group. Probably the same thing. Rover Metal. I'm not sure. Let's pull up over here on this screen.
ROVR.
Yeah, maybe you could tell us. I don't know what that stock does, what it is. ROVR.
Yeah,
pull it
it's
up.
It's
Provides online marketplace
care.
for pet care. Oh, I think we featured this not too long ago. So yeah, let's figure out what the heck is happening since earnings. Why are people interested? And is that a fleeting right? I always tell people, don't just trade the charts. Make sure you understand, for Coin, I have been following Coin. I know their story, so I kind of agree with you that whatever's going on, but do check into the news headlines, find out why there's been a little bit of an uptick. Rover, on the other hand, I'm just going based on being a pet owner myself. I'm not sure if it is something that is fleeting. Check into the news headlines. If you feel confident that when a top is found technically that it really will be a sell-off, then same thing. Let's short this thing and go from there.
Yeah, Rover is up 84% on the year. It
Yeah.
has a $1.5 billion market cap. And
I
I
mean,
think
people dig their pets, man. I know that I have gone to heck and back with my kitty cats because I think, they're the best things since sliced bread. So I'm all about companies that are, especially if you can get like home deliveries of whether it be pet meds or whether it be food and litter and all that stuff. I love it. Anything to make it possible to be a pet owner and make it easy.
and theirs is more like dog walking,
Oh,
babysitting, drop-ins, and
oh,
like
that's
through the app.
I was thinking to myself, I know this company. My wife used Rover in order to find caregivers for our cats when we went off traveling and somebody needed to come in and check them and do. Okay. Yeah. Yeah. So be careful about shorting this company. I think Rover is gaining some momentum because my wife and I are old. And so if we're actually smart enough to use the app to be able to use a product or service, then it's getting market adoption. It's not just early adopters or innovators who are buying that service. It's
Oh,
it's old people.
well, that's good to know, AJ. If AJ is using the product, it's a stock you would want to not
In
you wouldn't
fact,
want to short.
I there's a book that was written. I just pulled it off my bookcase. There was a book that, and I don't know, I'm not hawking this book or anything, but it was called Crossing the Chasm. I don't know if you can read that title. Crossing the Chasm by Jeffrey Moore. It's over, I want to say it was written in the late 90s or even the early 2000s, but this describes a the buying population. Here it is. There's a picture of the bell curve of first the innovators buy a new product, and then it goes to the early adopters, then the early majority, the late majority, and then the people who are laggards, right? These are the last people who would buy a product. And this whole book is teaching marketers how to get the early adopters, how to go from selling your product to just early adopters to the early majority, because those buyers are way two different people, and it creates a chasm for a company. Anyway, I'm probably not an early adopter. I'm probably either the early or late majority. So if my wife is actually later than I am, I'd buy new technology before she would. So if she's using Rover, it's probably something that's getting to the masses.
Yeah, maybe that's a name we'll keep in mind. Maybe add to the watch list because it does have the potential in the long run. And I agree with you on some of those points. All right.
Oh, Rachel actually clarified, and she wants to go long on Rover and Coinbase. Um, So in that case, you want to make sure you buy them at a low. And I would say I agree with you on Rover. I don't agree with you on Coinbase. I'm actually somebody who believes that, especially as the Fed continues to sell their bonds in their quantitative tightening program, they just started, right? I have a feeling that crypto is going to get more kicks to the side. So um, I'm not sure that there is a long play in crypto. I think there's a lot of short-term trading that you can do in crypto and on companies like Coinbase, but I'm not a better of the long play. But that's just me. That's my 2 cents on Coinbase.
All right. Well, let's move on to your 2 cents of
Thanks,
what you
Rachel.
like. Yeah, thanks, Rachel. Of what you like this week, and this is so AJ's pick of the week for this week is heading into the financial ETF sector with ticker symbol XLF. Wow, seeing some volatility there.
Yeah. And this is going along with financials in general. So this is a perfect, the whole discussion on Coinbase. I'm actually looking to short this financials ETF. So XLF is an ETF that tries to mirror the overall financial sector, right? And so you can see that they too have had this short duration. I'm going to change my indicator out really quick. So I've got my indicator. This is my free indicator that you can get through my website. I've got it in two different configurations. So I'm going to turn off the one that I use for determining tops and bottoms in the indexes and turn on this variation that I use for my individual symbols to get, entry and exit for actual trades. And so you can see here that they've been in this like rally since, well, I got a signal back on October 31st. So it seems like a lot of these guys started to get a rally towards the end of October. So for the last month, exhausted, right? The financials in my analysis across the board, individual stocks as well as this ETF, starting to get exhausted. And so I am looking for that sell signal. And once I get that clear sell signal, and I want to see not only my primary indicator tell me to sell, but I also want to see validation and day of follow through. But if I get that strong sell signal, I'm interested in shorting this. That means shorting the ETF, do it in lots of 100 shares. Or I'd be interested in buying some deep in the money, far out in time put substitutes, right? The put substitutes are really nice because number one, I'm buying it instead of shorting it. So I can do it with a cash account if I don't have access to margin. So that's really nice. And also by doing that, I'm including a little bit of leverage. I'm supercharging the position. So far out in time, deep in the money put options, these things are going to act dollar for dollar, exactly like the stock, only inverse and only at a cheaper price. So I like that idea. In fact, if I take a look at the option chain, I'm talking about going out, not even April, that's not even close enough, maybe September of 2024. And I'm talking about going deep in the money. Remember, with puts, deep in the money means the strike price goes higher and higher. I'm probably looking at this one right here. I'm interested in probably the 40 strike price out in September, or I could see even going out to January 2025. So that's what I'm interested in. If I happen to have purchased some of this stock or purchased some deep in the money call options towards the end of October, beginning of November, this would be a great opportunity for you to sell call premium and buy some protective puts like we talked about, where you buy you sell the call premium, get that income, and use that to offset the protective puts so that while you're not making money on the appreciation of the stock, you're making money on the pullback. And finally, if you already are short this and you've already sold some protective puts and bought some protective calls, this signal would be a great opportunity to go ahead and roll out those protective calls. So depending on where you are in the trade life cycle, what positions you're in, that would determine what adjustment to make. For me, I'm not in the position or trade at all. So I'm looking to either short this symbol or buy some substitute back month protective options.
All right. AJ's pick of the week, XLF. Do any of the potential economic projections, does that have an impact on your thoughts here in terms of what financials are going to do the next couple of weeks?
Yeah. Although I'm looking at the bigger picture, and I have been watching, we've been watching Bank of America, Citigroup, Wells Fargo. Those three we've been selling premium on for years now. And so I keep kind of the tabs on those three. And then I look at, since those three are on my watch list, and oftentimes they're on my hot list, almost on a daily basis, I at least view the sector, the financial sectors chart. So I kind of have an insight in the bigger picture. And so, yeah, there might be some news headline sips, but it's not going to change my sentiment so much. I'm pretty much, the reason why I'm featuring this is I'm pretty much a go on this. But again, waiting for that signal.
All right, that's AJ's pick of the week, XLF. We'll keep an eye on that. We've got a couple interesting speed round tickers, so let's go ahead and run through those.
Okay.
Our first one is Jennifer in Baltimore, Maryland, interested in apparel brand Under Armour. Ticker symbol UAA. What are your thoughts here, AJ?
I'm going to
Nice
have to
price, $7.
Oh, I like it. I like it a lot. It's going to that with that low of a price, it means that anybody, even with the smallest of portfolios of just, $1,000 or even $800 could probably do something with this. I'm looking back a little bit further because I want to see how long have we been horizontally choppy. It looks like we've been horizontally choppy since May of 2022, right? Is that right? May of 2022, and no, I'm sorry, May of this year. I was going to say I'm only looking at a year-long chart, so May of 2023. Yeah, this is what we would call a mature sideways trend, and every time we go top to bottom, we get almost a 100% retracement. So I really like that. I'm going to come back to my 6-month chart. And so looking at where I'm at, I'm using, so my little indicator here, the free indicator you can get if you get free access to the web portal. It shows top, it shows bottom, and then it has a fake symbol. It shows that we're in a little slight medium-term uptrend. We've got kind of a short signal here. I see why you're asking about it, because you got a short signal but haven't gotten the daily follow-through. Yeah, I think that you can follow through on this symbol. So again, when you get your full signal, so it's not just the primary end of day indicator, you want to have some sort of validation, whatever you use. I usually use volume or something like that. And then you want to have day of follow through. And so I can see you're looking for day of follow through. If we get that, yeah, I don't see why you wouldn't short some UAA, or like we've been talking about, buy a back month deep in the money put option. And then as this goes down and your position appreciates, you're all good. If it stops at this level of support somewhere between about $6.50 and $7, then we sell put premium and buy protective calls. And you just keep that cycle going, creating that cyclical income generating off of this Under Armour position. And the only thing that I would watch out for is Under Armour is often a gift given during the holiday season. So you want to, make sure that when the next earnings season rolls around, that you're aware of whether Under Armour did well or not for the year, because that could be a thing. Or when earnings season, make that the cap or the deadline of your position. Cash out at that time so that any surprises during earnings doesn't affect your premium selling position. But I like that, Under Armour.
Yeah, and we've talked about a number of retail names being in their heightened sales cycle of the year, right? And those will be reporting right in January, February. So definitely keep that in mind with some of these retail names. So thank you, Jennifer. All right, heading down south. This is Casey from Austin, Texas. Interested in a name that we've talked about a few times, even multiple shows, and that's Zoom, ticker symbol ZM. I wonder if Casey took one of those positions that we discussed.
Yeah, it's funny that Casey's mentioning Zoom, because we almost took it off of our list. In fact, we did take it off of our list because we kind of got burnt on Zoom. We were waiting for a signal and we never got it. So about 2 or 3 or even 4 weeks ago, we took it off of our list. But I see that there was a signal here on October 30th, probably right after we took it off. I think we took it off after getting, teased by this signal here. And it's been going up ever since, and now we've got a shorting signal. So if you took that position, if you bought some Zoom stock or you bought some Zoom substitute options, yeah, let's wait for this end of day sell signal to come in place. Let's make sure on the day of trading, so it would be Monday or Tuesday or whenever next week, that we get that follow through. This would be a fantastic time for you to sell your call premium and for you to buy some protective puts. Your protective puts would be 3 to 6 months out and probably somewhere below this $58 strike price. If we take a look at Zoom stock and we go 3 to 6 months out, right now it's the end of November, so we're talking about December, January, February, March, April, May, somewhere between February and May. I like these May options right here. And so we see we're trading every $5. So if we're talking about protective puts, we could do the 60 or we could do the 55. I almost feel like right now, with the market being a little bit uncertain, you would do the 60. So what I'm saying here is, why don't we sell the $65? Well, usually near term, which is the options we would sell. Let's see here. I'm going to scroll all the way up to the December 15th options. Yeah, these things are trading every dollar. So what's nice about that is we could sell whatever is at the money, error to the side of out of the money. So if we're currently trading at $64, maybe we trade at 65 or 66. So you sell the 66 December or even January option, depending on when you get that final sell signal. And then at the same time, you go ahead and buy some protective puts at the $60 range. And now your trade is protected until, whenever you get your range bound, and that trade you just leave on autopilot. Let time pass by, let all those values appreciate. You can't go wrong. For folks that are thinking about getting into Zoom, this is an example of an immature sideways trend. Remember, we like to have 2 tests of support and 2 tests of resistance. Zoom was trading very nicely between about 64.50 and 73.75. It dipped down below that level to a point where we abandoned it. And so I generally like to wait until it's established its new levels of support and resistance before going in on these trades. For Casey, he's already in, so we're giving him some advice. But for those of you thinking of jumping in on Zoom, you might wait for this thing to mature.
All right. Thank you for the follow-up. Thank you for the inquiry, Casey. Hopefully that was helpful. Moving on to our third and final name in the speed round. This is Sarah from Pittsburgh, Pennsylvania, interested in APA Corp, ticker symbol APA. Not sure what this company does.
Energy, Apache.
Okay.
Their energy. So yeah, not sure about the outlook of energy. It seems like oil prices keep dropping. OPEC has postponed their meeting at least past this weekend. And what that's telling investors is that OPEC, and they postponed it because OPEC is an interesting organization, aren't they? They already know, because they like to vote at the OPEC meetings, as whether to turn the spigot on further in the Middle East, leave it where it is, or tighten it up, right? That's what they do at OPEC. And it turns out that they almost have these meetings now just as a form of ritual, but they try to make sure that the votes are already figured out ahead of time. And apparently there's some upset, like there's some disagreements about how the vote will turn out. So they've decided to postpone this meeting because they don't know in advance how the votes are going to turn out. Don't tell me how that works out. But yeah, so there's some uncertainty about what's going to happen at that meeting. So they postponed it. So in the meantime, it means that OPEC is not going to be playing with their supply. They're not going to be changing it, because they only change it once they officially have these meetings. So with that said, yeah, the outlook on energy, especially with Apache, with their drilling here in the States and their logistics here in the States. I'm not sure about that. With that said, I see here that from a technical perspective, we got a bottom, and then that bottom was reversed before we got the day of trading follow through. We got another bottom, and then again, we've been having a hard time getting that day of trading follow through. So I would make sure I got a good bottom signal before going long on this symbol. And if I did go long on this symbol, you could either go long the symbol or long the deep in the money call options, and that would establish your initial position. We call it a covering position for you to be able to sell call premium in the future. But again, I think you better be a little bit careful with this. Tread lightly. Even if you do your risk analysis and it says, hey, it's possible with your size portfolio to sell X number of share or buy X number of shares, I might, make this a smaller position than what the max you're capable of doing with your size portfolio. Or in my world, I might actually just look for something that's a little bit more predictable right now. There could be so much happening right now that can change the outcome. And when we sell premium, we like to sell predictable. We like to sell boring stocks that are just stuck in a sideways channel that, that's where they're going to live, right? Versus something that has this outside influence, like the price of oil and what this group of cartel members who are going to vote in who knows when, because they're playing around. So that's my thoughts about Apache. Good questions on that one, Sarah.
All right, thanks, Sarah. Some names we like better than others, and that's just what it is. That's why we've got the show, and we definitely tend to lean towards the opportunities that are a little bit more predictable, like you said.
Yeah.
So thank you, Sarah, Casey, Jennifer, for those speed round questions. I do want to give everyone an opportunity before we close the show out to tell the viewers about your one-on-one coaching program. This is something that we've been enhancing over the past couple of weeks. I'm sure some of our viewers have received some of our emails. But once again, if you're watching and you're sitting on the sidelines, curious about this art of premium selling and using options to improve your portfolio, but don't necessarily have the capacity to, join the workshop. Maybe you need a little bit one-on-one hand holding, a little bit more precision in going through examples and things like that. AJ's one-on-one coaching program is perfect for that. So if that's something you're interested in, we've gone ahead and thrown the link in the chat. I highly encourage you to go over there and sign up. If you do, you'll schedule a free 30-minute, maybe like 15-minute, 30-minute appointment with someone on our team to help answer all your questions. So the good thing is it's not a hard sell. It's really intended to help you become the best investor that you can be. And it's not for everybody. So if it's something that you're considering, definitely go check it out. But it's not a hard sell. All right, so the link is in the chat for that. The markets are going to be closing soon. Do you know what time everything starts to slow down in the next couple of hours, the next 2 hours or so?
Exactly an hour and 6 minutes. Closes 1 o'clock New York City time, so it's 11:55 right now. So in an hour and 5 minutes, they're going to close down the market for the day and then back open on Monday.
So the market will be closed. Everyone, probably lighter on the volume today. People are going to be traveling and back to business next week. All right. So with that, AJ, anything we should be preparing ourselves for? Should we just kind of be hanging out with the family and enjoying time? And then next week when the portfolio managers get back around, get into the markets?
Yeah, and should I tell people, Sip, about our sale that's ending tonight at midnight?
If we can get them access to whatever this huge discount is, without a doubt.
Yeah. So we're offering something that we've never offered before. and it's ending tonight at midnight. So that is our 6-month program. So this is a little different than the coaching. This is for folks who just want to get their feet wet. It's a self-study thing. It's not necessarily having us with a one-on-one coaching. You do have access to our whole web portal and all of the replays of all of our previous workshops and learning webinars. We have once a month lecture series that's all recorded that we've been doing since 2007. We have recordings all the way back to then. We also have a weekly workshop where it's an interactive workshop. We get all people on board. We go through a whole bunch of symbols, find a symbol that is really worth selling premium on, and we plan that trade out and give everybody the plan so that they can go ahead and trade it themselves. And then we also have where you can send me your trade plans before you actually trade them, and we'll review them and give you our feedback, so you don't go off trading premium selling positions that we knew up front weren't going to work out. And so I ask you to do this for 6 months with me, not because it's going to take you 6 months to learn. In fact, I think it usually takes people like 1 or 2 weeks to learn, but because I want to be there having you come to the workshops and getting these free setups from me for 6 months. So that means you're going to get like 26 of them. That could fill up your whole portfolio and make it, on cruise control for the next year or so. But in addition, I want to be there so that I can help you learn how to do this by reviewing your trades for you. But do realize that this is not the hand-holding in the big coaching programs, but this is our 6-month program. Usually it goes for $597, right? About $100 a month. But what we're doing is, number one, through midnight, so you might want to jump on this. We're taking $100 off, so that drops the price to $497. In addition, we're offering a 5 monthly pay, and I've never done that before. And there's no finance charge for that. So if you wanted to kind of jump in, instead of spending the bulk sum of $497, you could actually jump in for $100 for the first 5 months, and then the last month is free, right? It's not a subscription service. This is a payment plan. I just want to make it easier for you to get in. And finally, there's one other benefit, and that is we're developing a whole bunch of paid for indicators, not the free indicators, but ones that are paid for that actually help go into help you do the premium selling. The free indicators are for just analyzing the overall broad market, and they're very broad in scope. But we've got some paid indicators that we're developing, and through midnight, we're making it available for you to get those kind of bundled in to your 6-month program. So we're looking to get a whole bunch of new folks in. So we've made this possible, and I think the website it's a long one. I'll put it into I don't know if I send it to you, Sip, would you be able to publish it for everybody?
Yeah, without a doubt. And then also, if anybody's interested, again, just leave a comment or a DM and we'll get you the link as well.
Yeah, I think it's coming up right here. I think it's called special offer, right? Let me just make sure I've got this. We've been emailing it, but I also wanted to make it possible. Yeah, that's it. I'm going to put it into the Slack channel for you, Sip, and then you could publish it for everybody.
All right. There it is.
So you
coming
can,
your way, guys.
And if what I said was a little bit confusing, you may just go ahead and read this web page that I'm sending you to, because it's got everything I said kind of spent out to you, or whatever you want to typed out for you, so you can read it in writing. But you can see on the page there's only 10 hours and 59 seconds left. 59 minutes left to take advantage of everything that we're offering here. So you may want to jump on that if you're interested and you're brand new, right? It's for folks that are brand new.
Because how many other Black Friday sales are going to help you accumulate the knowledge that you can go and have more Black Friday shopping
right,
sprees, right?
right.
That's what we're selling.
And
We're
I just,
selling the knowledge.
yeah, I want to emphasize it's not a subscription service. It's a 6-month program with a start and an end. And if you do take advantage of that payment plan, it's not because it's a subscription. You're just cutting up your payments, right? So expect to be with me for 6 months.
All right, there it is. I think that was a very full, robust show on a quiet ending in investing week. I'm sure everyone's excited to get back to their family, get back to their leftovers. AJ, everyone, I want to thank you guys for tuning in, for checking us out. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. There's a ton of links for you guys to check out: the workshop, the one-on-one trading, the free indicator, the Black Friday sale. Definitely plenty for you guys to work with. If you have any questions at any given moment, feel free to leave a comment, leave a DM. Someone will get back to you. Someone will answer your questions. Otherwise, yeah, I hope everybody enjoys the weekend and does some shopping and saves some money today for all these Black Friday specials.
I gotta say, there's so many people. We see so many views on our video. Just take a minute right now and hit that subscribe button. It would do us a huge solid if you hit that subscribe button. Don't just watch my videos. You should be long-term subscribers to my YouTube channel and all that stuff.
That's right. That's right. All right, AJ, I think that'll do it for us today. Thank you once again for your time. Thank you, everybody, for tuning in. We'll catch you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.